Happy Friday. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lewitinn, and Managing Director of International Content, Emily Parker. What a whirlwind week. We are done with consensus. We've gone out with a bang. What were some of your favorite moments, guys?
Of course, I enjoyed listening to Ray Dalio go off on the U.S. dollar. That seems to be something that was one of the big takeaways I had, at least, was that there seems to be a lot of concern about the future of the American dollar, as its role in as a reserve currency, as its role in general in the markets, and that was a big takeaway from, at least from the institutional perspective.
And it's definitely had an impact on Bitcoin. Checking in on Bitcoin right now, the CoinDesk Bitcoin price XBX index is currently trading at 37,170. Bitcoin is slightly down about 6%, almost 6% over the past 24 hours, and the CoinDesk Ether ETX index right now is at 2616. ETH is also down over 6% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. And Emily, your thoughts on consensus? And you've also been checking in with our China audience as well, correct?
Yeah, so consensus was great, but as you said, we've also been running sort of a parallel consensus content in China. So we did 3 Chinese language podcasts, 2 Chinese language clubhouses, more Chinese language videos that I can even keep track of, both in original Chinese and with subtitles. And what's really cool about the Chinese content is that for some of these international crypto stars, you really see a different side of them when they speak their native language. For example, we did a long interview with Justin Sun, who I would argue has a very different vibe in Chinese compared to English. And he just gave a different impression. So if you speak Chinese or want to learn Chinese really quickly, I recommend you check out our Chinese consensus content.
That's really cool and very interesting that, this content is getting a lot of traction in Asia. And what a blowout ending. We had Tom Brady, we had Sam Bankman-Fried close out the show, as well as Kathy Wood, Fred Ehrsam from Coinbase, and Hayden Adams from Uniswap. But this show must continue to go on. And one of our guests during Consensus was a member of the Stellar Development Foundation, which is making a $15 million investment in AirTM, which is a digital wallet and peer-to-peer exchange platform based in Mexico. It's the Stellar Foundation's biggest investment to date and aims to improve financial services across Latin America. And joining us now to discuss is Stellar Development Foundation CEO and Executive Director Denelle Dixon. Welcome, Denelle, to the show, and thank you so much for joining us during Consensus. What a week. Now, you're working with developing nations, but I wonder what's the particular opportunity you see here with AirTM in Latin America?
Thank you for having me. With respect to Latin America, even despite its size and its population, only 5% of all global cross-border transactions come through Latin America. And that's primarily because in countries like Mexico, 91% of the transactions are in cash still. So with AirTM, you can see the opportunity to be able to leverage that wallet and then connect it with the Stellar network to have it really be that global platform, to rely on the anchors in Stellar, and to be able to offer that on and off ramp for everyone with respect to crypto and with respect to stable coins, to hedge against hyperinflation, to be able to get access to the banking system. It's really exciting, and they're really deeply connected to the mission of SDF as well, so it's really nice to have that.
Yeah, during Consensus, you also brought up the need for global collaboration. Does blockchain really have the proper or the power to enable interoperability at a global scale?
Blockchain has the opportunity that we actually had in the early days of the web to be able to continue to enforce those standards and to keep those standards together so that we can actually have that interoperability. We already see it with respect to stablecoins like USDC, what Circle has put out there, be able to go cross-chain and to create that cross-chain experience so that users can leverage the different opportunities that other chains have. Having that standard language and the ability to have that interoperability creates an opportunity for us to impact in ways that the web sort of failed in terms of the content side, because so few actually control so much on the content side of the web. We don't want to see that in payments. We actually want to be able to get to not just the promise but the actual ability for blockchain to create that openness, that interoperability, and the lack of borders with respect to access to the banking and the financial infrastructure.
Morning, Denelle. The Stellar Development Foundation has invested about $33 million so far this year. What's the underlying theme? Where are you investing? What types of companies? Why? If I have a company, how am I getting your money?
Yeah, so we have really a strong guidepost with respect to the enterprise fund. They have to, the investment has to benefit Stellar and has to create these network effects within the ecosystem. So some of it's going to be more like infrastructure, where you're going to have companies that like Wire, who actually offer APIs to their users, their companies that they work with, so that they can actually get to the on and off ramps with respect to the blockchain. Some of them are going to be wallets that are going to offer these kinds of really interesting, unique local services for individuals in certain regions. So really, it's those guideposts about benefiting Stellar and the ecosystem, and then really deeply understanding what Stellar can actually do to help this company, whichever company we're targeting, be able to expand and grow and to create the impact that they wanted to create in the world.
There's been this trend of kind of overseas blockchain projects or companies kind of getting involved in regions like Latin America, and everything ranging from airdrops to other collaborations. But sometimes these don't go that well, right? I mean, like there's definitely been stories of like even these really well-intentioned projects. Once they get on the ground, they sort of misunderstand the regulatory environment, or ordinary people have trouble actually accessing these services. I mean, what are some things that can go wrong when kind of like these overseas foundations try to go in and help these other countries?
Well, it's so important, and I think that this is one of the things that we sort of lose sight of, depending on where you sit, that you actually rely on regional players to be able to help and to be able to assist even the governments. So we're happy to come in and to talk to governments and regulators all over the world, but oftentimes it feels a lot like someone from another country coming in and telling them what to do. When in fact, if you really work through local players and you really understand the problems in that region through that local environment, you're going to actually create a much larger impact. And so I think what you're talking about in terms of the mistakes that have happened, it's because we don't actually remember and respect that we don't actually understand all of the problems that are existing in each region. We might understand our region, and we have to respect the local players to understand what needs that their constituents have and how to really effectuate the change that you want in the local region. So I say this is the whole benefit of open source, and this is the whole benefit of decentralized networks, when you can have this innovation really happening in those regional markets so that you can solve the problems that folks there have versus us trying to decide what those problems are. So I think the same is true with any foundation going in there. Respect the local.
Mm-hmm. Denelle, you talked about financial inclusion at Consensus during your presentation. What are some of the use cases currently on Stellar helping to achieve this?
Well, RTM is going to be one that actually really helps that last mile and help folks get it on and off and off the blockchain and really leverage this as a form of a banking system for them, because they don't always have access to that. I mentioned during Consensus Leaf Global, which is one of my favorite because it's focused on refugees who often have a really hard time getting value across border to their family. So a lot of them are going to be wallet focused. A lot of them are going to be these anchors that are actually they're issuing the assets to be able to help to solve the local problems and to have a local asset that is a digital asset that then you can leverage on Stellar or on blockchains to be able to go through the decentralized exchange and to make these cross-border payments really simple on both sides of it. So again, a lot of it is just about the real local needs that we see in these regions, and to really support those by using Stellar and the power of a global network like Stellar.
So Denelle, what do you expect to get out of RTM with your investment there? What do you plan on? What's a guidepost, so to speak, for them? What hurdle do they need to overcome here?
Well, I think that for them, they can really rely on the Stellar network and the anchors. Remember, what we're trying to do is create that network effects in the ecosystem so that other players can benefit from new participants coming into the ecosystem. So I think it's going to help RTM to scale rapidly and to become global, to serve more demand that they see out there. And this global expansion can be leveraged through the anchor network. So you can reduce the costs of compliance for RTM for expansion into these regions by relying on these financial institutions that already exist in the regions, that are part of the network, that can actually provide that regulatory support and also offer more use cases and more distribution for their assets. So I think it really is that network effect. So what we're going to help to do is get AirTM to get that full transition to the crypto company so that they can actually provide more regulatory clarity for their own investors and for others that want to bring money into them. But also it helps to create that network effect for all of the players that exist on the network. So it really does line up nicely to those guideposts that I talked about, improving Stellar and creating benefits for the ecosystem.
All right. Well, Denelle, thanks for joining us and good luck with the expansion plans into Latin America. Looking forward to seeing you progress there.
Thank you for having me.
All right. That was Stellar Development Foundation CEO and Executive Director Denelle Dixon and guest during Consensus. Speaking of Consensus, we have a highlight reel of some of the moments that were pretty memorable of the week. Take a look.
This year we've seen institutions like yours. I mean, I don't know whether you guys have actually bought any Bitcoin, but I certainly know that you're interested in it. We've certainly
I have some Bitcoin. Yeah, I think Bitcoin's greatest risk is its success. As it becomes a bigger deal and more of a threat, let's say people want to sell their bonds and they want to buy Bitcoin and they want to do that in a bigger way, like buying gold or something in a bigger way, and then there's more transaction. They lose control over that. And that's an existential risk.
I gave a talk yesterday. There was a poll asked of all the participants as to when they thought the U.S. would launch a CBDC. Did they think it was going to be A, in 2022, B, 2023 to 25, C, never? Only 5% of the people said never, but I'm going to put my money on never.
CBDCs are not here to replace the traditional and conventional monetary system.
There are many countries going through hyperinflation where the currency is devaluing very, very quickly. And basically their citizens are becoming poor. And many of those guys are, many of those citizens in those countries are flocking into Bitcoin or crypto to sort of, so even though they may still love their country, but they may no longer love the currency.
I think the bottom line message I have is that we have work to do in modernizing our custody rules all across the board. And I think as with many other areas, crypto may force us to do that modernization faster than we otherwise would do.
It's a little bit of a weird occurrence. I think it's a healthy occurrence in some ways because I think that, there is a lot of stupid dialogue going on about ESG, and stupid not in the sense that ESG is stupid, but not the dialogue was.
I'd be thrilled to be the first state to let you pay your taxes in a variety of cryptos, and we'll look into how we can get that done.
I see the volatility in the market all based upon FUD, and the FUD is, at first it was the Chinese are mining too much Bitcoin, and then the FUD was sell Bitcoin. And the second FUD was the Chinese are going to stop mining Bitcoin, sell Bitcoin. And then the FUD was, well, you can't buy Bitcoin in China, sell Bitcoin. And then the FUD was, oh, the Chinese reiterated you can't buy Bitcoin in China, sell Bitcoin. And then the FUD was, oh, IRS says you got to pay your taxes, sell Bitcoin. I saw something on Twitter today that suggested that Bitcoin is 2 or 3x as sustainable as other energy users. That's the kind of story we need to get out, but we need to legitimize it by having really good data.
I think there's some very interesting research going on now, and indeed investments, and I'm part of it, to try and find a way to tag a Bitcoin, a coin itself, that to prove that it has a wrapper around it, that it came from a sustainable miner. And this sounds out there, but it's being worked on right now because that's what institutions want. And when that dam gets released, the amount of capital that will come into Bitcoin, it'll be the reason it goes to 100,000, 200,000, and all the dreaming that's been going on around price appreciation. That's not going to happen until institutions start to buy it.
In reality, every asset class is going to get tokenized. And that includes whether it's physical property or paintings or buildings, what have you. The notion of tokenization extends well beyond currency as a medium of exchange.
The early movers and investors and traders have said, wait a minute, let me take a step back. I have to anticipate an extraordinary amount of supply. No different than social media accounts, Joe. Everybody's going to have an NFT. There's going to be Pokemon NFT. There's going to be UFC NFT. There's going to be LeBron James exclusive at Novak Djokovic, the US Open, Budweiser, like Nike.
Someone had really called me out to change my profile picture and use the laser eyes. So in my understanding, it was really a vote of confidence to really get into the conversation, as I'm such a big believer in crypto. And I'm a big believer in it. I don't think it's going anywhere. I think absolutely there's going to be volatility. But at the same time, knowing, when there's a lot of change and there's disruption in markets, there's a lot of people that are going to fight those systems.
The more we create savings in it, the more you might say, I'd rather have Bitcoin than the bond. Personally, I'd rather have Bitcoin than a bond.
Wow. What an incredible week, huh?
That was one of my favorite clips from there is, we have all these panelists talking about CBDCs and what they're going to look like. And then Brian Brooks is like, my vote is on never. We will never see a CBDC. A little bit of
transformation.
We have to acknowledge the elephant in the room, and that is the hoodie guy in the interview we did with SBF, because that became its own meme. I understand they're going to make an NFT out of it. That's the guy who was wearing a black hoodie sitting behind SBF while we were interviewing him. And apparently that's like a big thing now. Like everyone's talking about this guy, and they even created like a trailer. It looks like a movie trailer about this. The guy was just trying to work while SBF was talking to us. And so that's our piece of internet.
I've got one word. Desk coin. Where's the drop? We need a drop in the link. The link in the drop in the channel here.
Yeah, I'm disappointed we can't trade it. I want to trade it already. I want to buy some and accumulate it, and I want that swag.
Some one-on-one experience with Justin Sun, a lunch.
All right. or even just I'll even trade it in for a coffee mug. FYI, whoever's watching.
We'll get on that. All right. Coming up, crypto markets update with NEM Group. Stay with us. For the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, May 28th, 2021. I'm Angie Lau. Let's get you up to speed from Asia to the world. As crypto grows in size and magnitude, we look deeper into scams right now that are landing some more victims. Police in South Korea have arrested 14 individuals in a cryptocurrency fraud case estimated to have cost 69,000 investors a total of $3.85 billion US dollars. That brings the country's losses to crypto fraud to get this, $5 billion over the past 5 years. This accounts for an increase from 41 cases in 2017 to 333 last year. And that is a huge jump. This trend is not unique to Korea. In Singapore, police recorded 393 cases of crypto crimes last year. That's 60 more than South Korea. Now, Singapore-based Fireblocks Vice President Stephen Richardson explains why frauds and scams could rise during a bear market.
You're looking for a return on Ethereum yield. You go all the way down to exchange number 333. You put your Ethereum there. That's a malicious actor that's basically launched an exchange and is going to run away with your funds. And as you get towards bear markets, right, where people are looking for that increased yield, they're going further down into these places that aren't necessarily regulated.
Although growth comes with increasing adoption, bad actors will find ways to exploit the surging interest for personal gains. It's kind of a whack-a-mole problem for regulators too. How to protect without inhibiting. And it's a challenge that continues to play out in Asia. All right, early weekend for Bitcoin, it seems. Take taking it easy on a Friday after a rough few weeks in Asia, down 3.5% as of 4 p.m. local Hong Kong time at the end of the Asian trading day. And in the top 10 for cryptocurrencies, Polkadot representing the top 10 today, up 0.4%, while the rest of the top 10 is in red. And more development in China's mining saga. Sichuan's energy regulators are actually getting together to discuss how a crypto mining shutdown will inversely affect their region. Sichuan is one of China's mining hot zones, famous for its cheap hydroelectricity, especially during the wet season. Well, one of the key components in this meeting's agenda, unused water in hydroelectricity generation. This refers to abandoned water that could have potentially been used to generate hydroelectricity. So if miners move elsewhere, that could actually lead to more water waste in the region. According to the National Energy Administration, the amount of water wasted in the river basins of Sichuan province was over 20 billion kilowatts last year. That's 5% of Sichuan's total hydropower production. And finally this, back to Korea to wrap up an interesting week in crypto. Bitcoin, Bitcoin, wherefore art thou, Bitcoin? Crypto coming between Romeo and Juliet. A reported 4 in 10 couples hiring divorce attorneys in Korea do so because of crypto troubles. Nare Young is a divorce attorney in Seoul. She says she has handled a few crypto-related cases, but since the latest downturn on the markets, well, calls have increased. Yang says the reason is the loss of money, but also the loss of trust.
이익을 봤다라고 하면 대부분 이혼 사유로 찾아오시지는 않고요. 대부분 손실의 경우에 찾아오시는데 그 손실이 우리가 여유 자금으로 투자를 했을 때보다 레버리지까지 일으켜가지고 무리하게 투자를 했는데 그게 다 손실이 난 경우. 그리고 또 그 레버리지를 일으켰다는 사실을 배우자한테 얘기하지 않고 몰래 내가 한번 잘 해보려고 했다가
I guess Bitcoin can't buy you love. And that's the Daily Forecast. I'm Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, let's have a live look at Bitcoin. Can't fix love, but maybe could help you with it. Right now, Bitcoin trading at $36,856. Bitcoin is down, lovebirds, down about 8.3%, and ETH is down as well, about 7.4% over the past 24 hours at 25.83. All right, joining us now to discuss the crypto markets is Nicholas Pelecanos, head of trading at NEM Group in London. Welcome, Nicholas. So we're seeing a recent pullback in the So we're seeing a recent pullback in the crypto markets right now. You brought in a chart for us that shows the kind of the technical analysis of Bitcoin with a head and shoulders platform pattern. Does that have an explanation of the pullback that we're seeing right now?
Yeah, so I mean, this particular chart here shows BTC and ETH. I mean, this is sort of more your hopium in the sense that if this plays out, perhaps this rally won't end up being as bad. I mean, sorry, the sell-off won't end up sort of being the end of the bull market. You know, what's sort of been interesting about how the price action's been in the last month is, you know, we peaked in sort of mid-May there, and you can see we kind of had a head and shoulders topping pattern. And then, you know, like if you think about like the core pillar of what a sustainable market should be, it's efficient, right? And when you have people buying meme coins like Shiba Inu or Australian Shepherd, whatever it is, that's not a rational or efficient use of capital. So, you know, things were definitely getting overheated. And, you know, as everything started to peak with the meme coins, you know, we started to see a sell-off in the majors as people decided to hedge naturally. But, you know, what's interesting is we've kind of broken some proper levels technically as well beyond sort of being in a state of irrational trading. So, you know, I brought in a few charts there. One of them sort of like a long-term time frame of BTC, and you'll see it's got like a rainbow back. what's interesting about that is we've kind of broken down through sort of some key supports, which in the past have sort of led to the end of a bull rally, except for 2013. And what happened in 2013 is we had a sell-off of the magnitude of about 70%, and the market died for about 2 months, and then it came back and set. I think it did like an 1,000% climb or something like that. So I mean that's kind of like, yeah, go on.
So, Nicholas, one of the things, though, that, when we consider about market sentiment, and this is when we were talking to some of these institutional investors, and their focus was on inflation, that Bitcoin particularly was this kind of hedge against inflation. We're seeing today President Biden's going to propose $6 trillion budget next year. So yet the 10-year yield has gone down a little bit, and it indicates that maybe inflation isn't necessarily such a worry right now for the market. So has it been overstated to begin with, and could that actually break through those support levels as the market just kind of loses that sentiment that inflation is going to speed up and heat up over the next few months? I mean, that 4% print we saw last month was a base case situation in the CPI, where we're going off a lower base, but as time goes on, that inflation number might go down. So are we going to see the market just kind of give up and say, oh, well, why do we need this Bitcoin thing anyway to hedge?
Sure. Yeah. So, I mean, one of the key inputs into our sort of bull thesis is forward rates, and we've been watching those quite closely. And you'll see, I think you'll see in March, there was a sell-off because the 2023 November LIBOR rate went up. And the market was pricing in, I think, just the December. The inflation. Like, first off, crypto markets are very narrative driven. Like you've seen, sort of, you had this DeFi theme, you had the inflation hedge narrative, you have sort of the NFT narrative, then you had the meme coin narrative, and then like now you've got this narrative of like a green BTC. So narratives drive markets, and so therefore you need to understand sort of what will cause that narrative, there to be a narrative shift, right? So yeah, we're watching forward rates for the inflation hedge narrative, right? And that's sort of one of the main things that could sort of be a reason why the market would continue to climb, and it has been. The argument can be made though now, like beyond sort of people moving in as a hedging function, perhaps like fund managers, you might not get the corporate money moving in, like, a company wants to move in X amount of their balance sheet into BTC for a hedge, just because now you have this new narrative emerging of BTC isn't sustainable. So if you're a company with sustainability targets, are you really going to go, okay, yeah, let's move balance sheet in? But also, are you going to do that after a 50% sell-off? So I mean, these are the things that we need to get our heads around, and I do think that sort of will cause a slowdown. My gut says that we'll probably see like a bounce. I still think the narrative's quite strong, and I do think that there's still a lot of sort of more like Main Street money that will enter and is sort of buying this dip from sort of the analytics that we're seeing.
Just to really quickly, because we're just running out of time, I just want to ask you, you just raised a really interesting point about narratives, and that's totally true. This is a very narrative-driven market. I'm just curious, do you think that the crypto market is more narrative-driven than other financial markets? And if so, why?
Yeah, extremely. Because we lack the proper sort of pricing mechanisms that real market, well, sort of traditional markets do. You can sort of decide if an asset is overvalued or undervalued in traditional markets, right, through its PE or something like that. You can't do that you kind of can do it in crypto markets. We're playing around with this kind of stuff, but you don't have those benchmarks like you do in traditional markets. So I guess the best way that I like to think about sort of, valuations is what is the utility of the technology, right? And like, can that technology achieve its utility? And is the capital flowing into the space being efficiently deployed for projects that can achieve what they're meant to achieve? So to break that down and give you an example, in 2017, we had the ICO boom. Towards the end there, a lot of the projects that were raising money couldn't actually build the projects they wanted to do because the infrastructure just wasn't there, right? And, we had sort of massive issues with scaling and gas fees. I mean, you can draw an analogy to that today, right? The networks are slow. Can all these products be built that people want, that for the functionalities that the capital is being deployed for? And the answer is kind of yeah, but it's not as good as it was, a year ago. It was undervalued a year ago by our metrics.
Yeah. Well, Nicholas, thank you so much for joining us this morning. Appreciate your insights on the crypto markets.
No worries. Thanks for having me.
All right, that was Nicholas Pelecanos, head of trading at NEM Group. And coming up, Nebraska is exploring blockchain technology and checking in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
CoinDesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hello there, Nick. We had a wild week of consensus, lots of news-making events. What were some of the highlights for you?
Hey, good morning. Yes, thank you. Congratulations on surviving consensus, everyone. I think to me, some of the most interesting events, we could talk about the headliners, Federal Reserve Governor Lael Brainard, but I think even just some of the smaller events that we had, we had two governors on TV or on stage discussing how they're approaching crypto. Wyoming Governor Mark Gordon, revealed that he owns crypto. So I think he might be one of the first, if not the first, U.S. governor to say he does that. You had another governor, Colorado Governor Jared Polis, say that he's interested in looking into how his state's residents can pay taxes in crypto. So those were kind of two things that stood out to me, just because, if crypto gets to a place of, acceptance and usage, it'll come from these places that, just kind of normalize it. So, not looking towards the people who are trying to build products out of crypto, but the people who can, help it actually be used for these things.
Nick, what was your biggest takeaway from Tom Brady? Just tell it like it is.
I don't even know. That was an interesting interview that he had last night. I don't know, the question I have now is, what cryptos does he actually own? What's he actually invested in? Because he said that he has, quote, definitely invested in the crypto space, but he didn't give a lot of detail. We know he's got a company, Autograph, that handles NFTs, and I'm curious to see if and when that does more. So far, I think it's just kind of announced and it's in the early stages. But I'm really curious about the specifics of how he's getting involved in this market. Beyond just helping people, celebrities, or brands sell NFTs and connect with their fans and sell collectibles. What's his what's the actual investment? What's the thesis he's got going forward?
Nick, FinCEN, you had a report about a couple of days ago that they might consider keeping on some of the Trump era rules regarding crypto. What does that mean exactly? And we expect?
Yeah, so acting director Michael Mosier of FinCEN came on stage yesterday morning. So he didn't necessarily say that they're considering keeping some of these Trump era rules. What he said in a conversation with Jill Carlson is that he's still looking at the controversial counterparty data collection rule that was released for public comment at the end of the Trump administration. And they have to consider it. They had a public comment period that closed a few weeks ago. They have to look through all those comments. They have to evaluate them, and they have to analyze each and every one of the 7,000 plus comments that they got. So my guess is, any decision won't be quick. But, I also...
What would the rules mean in general if they are kept?
So this is the rule that would require exchanges to collect counterparty data, so names and addresses, for every, private or unhosted wallet that funds are sent to, which, the big concern beyond just the data collection side is that some of the, offline, or not offline, but like some of these unhosted wallets belong to smart contracts, which don't have, names or addresses because they're not people. So there's a possibility that the adoption of this rule could break things like, I think one of the examples was the ETH 2.0 staking address. That one doesn't have a name, doesn't have an address, and it is an unhosted wallet under the terms of the proposed rule. So it could be that if it's adopted, U.S. residents or persons would not be able to stake ETH, in the run-up to the ETH 2.0, conversion. So that's one of the big concerns. I don't know yet. I don't think we have a sense yet of where FinCEN will land on that, but I do know that, there's a lot of opposition, not only within industry, but, various government officials are also concerned about this rule because it might go further than, even what they cannot, deal with. They don't want to collect, a whole bunch of data that they can't use.
Mm-hmm. Well, Nick, thanks for the update and keeping track of those developments, and have a great long weekend.
Thank you, and you.
All right, that was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
A Nebraska lawmaker is proposing a state study of agricultural applications for blockchain, including how the technology can be used to trace the origin of products from farm to shelf, monitor farm conditions such as weather, soil quality, irrigation equipment, and trace data verification for organic products. Joining us now to discuss is Nebraska State Senator Carol Blood. Welcome, State Senator Blood.
Well, good morning, friends.
Good morning. Senator Blood, I wonder, what is the state of crypto in Nebraska right now? Is it like Wyoming, where the state has passed several laws to encourage innovation and entice developers to come into the state to do business, or is it trying to get there?
So I'd say it's a little bit of both. I can tell you that my freshman year, which was 5 years ago, that I actually brought forward some DLT bills. But what I found that when it came to DLT and blockchain, that the only thing people really seemed to have a concept about was Bitcoin. And so it's taken a lot of time to train people and move them forward to try and get people to embrace the importance of anything that pertains to blockchain and DLT. But what I can tell you is that we did pass a bill actually within the last 30 days that pertains to cryptocurrency. And it is my hope now that as we move to the interim, which is the period between our sessions, that I can impress upon people the importance of this type of technology and agriculture, because ag's really important to Nebraska and our economy. And I feel that the harder we work to really educate our body, the faster we can move forward when it comes to utilizing that to help them make more money.
What inspired you to propose this bill, and how do you see blockchain technology benefiting Nebraska?
Well, although I'm 60 years old, I'm kind of known as the techie person in our body. I find anything having to do with technology of any type to be, quite frankly, it makes me giddy. I find it very exciting. I love that technology is always changing. There's always something that we can move forward to. Being somebody who grew up on a farm but now lives in urban Nebraska, I know the importance that we have to keep our farms moving forward and making money here in Nebraska. And I see technology as that next step.
Senator Blood, why do you specifically need blockchain technology for agriculture as opposed to just some other fancy database or, technological innovation?
Oh, good question. And I love that I get to preach to the choir for once, by the way. Usually I'm talking to people who only know Bitcoin and barely know that. So when you're talking about a consolidated record that really constitutes that single and shared version of the truth, that's ag, right? You talked a little bit about farm to table. So we know the domino effect that happens when we talk about utilizing blockchain. We know that once that agreement is made and everything is put into place, that it's pretty much hands off. And that's what we need for ag, because that's going to be less money and time that they're spending on things that they've usually had to deal with manually. So I think that when it comes to tracking organic food especially, like we truly don't know that the food we eat, where it comes from and what the process was bringing it to our table. So we're going to be able to utilize this technology to not only show where it comes from, but as you know, we can pinpoint what part of that field or that farm that it came from. We can tell you how it was transported. We can easily track it and make that information available for consumers, not to mention the health and safety aspect of it. We know that we can track things when it comes to foodborne outbreaks, right? We know that when it comes to salmonella or E. coli, that with the utilization of blockchain technology, that we'll be able to pinpoint where that came from and protect a lot of people from getting sick. But most importantly, when it comes to our farmers, not just talking about the consumers, is that we know that we're going to get money in their pockets faster, right? They don't have to worry about invoicing somebody and then waiting 30 days to possibly get paid. They're not going to have to be working also with trucking companies, because that's also going to be figured in at the beginning of the transaction. And that's why, too, that this interim study that we have, we are inviting Business and Labor Committee. We are inviting the Ag Committee. We are inviting Transportation Committee, because we want everybody to see that it's not just about the farmers themselves, but it's about what happens from the beginning to the end.
Senator Blood, welcome on our show. The question I have is this: what's the state's need to be into this study itself? I mean, we've seen similar things. For instance, in fishing, in the tuna industry, in fishing, we have several countries in the South Pacific that were part of a consortium that did that exact thing. So why does the state now need to do a study like this in Nebraska? Why not leave it to the private enterprise to develop something that says, hey, this can work and we'll pay for it? Why should the state have to go through a whole study process when it can be done in the private sector?
Well, it can definitely be done in the private sector, but if we create a public-private partnership, and we are inviting private entities to come in and testify during this interim study, I believe that we can move it forward faster. And I think there's also availability to, for instance, one of my first bills, one of the ones that I couldn't get through because the technology was just something no one could understand at the time, was to invite these organizations to come and set up business in Nebraska and make sure that we weren't going to tax any of their proposed products. But that didn't go over very well. But that doesn't mean I'm not going to revisit it, by the way. So I really feel that it's not an either or thing. I believe it's a combination of both of us working together to make it happen here in Nebraska. So yes, I'm definitely aware of all the organizations that can do all of these things within our state, but we should be putting out the welcome mat to make sure that it's easier and that we can move forward faster.
All right. State Senator, I wish you luck on this proposed study and looking forward to seeing Nebraska and further developments in the blockchain field.
Well, thank you, as am I.
All right, that was Nebraska State Senator Carol Blood. And that's it for First Mover. We're off for the holiday weekend. We'll be back on Tuesday. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. with all about Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.